and welcome to a very special crossover Footguns slash Wasabi Boat Research podcast. Today we're talking with legendary value investor Thomas Braziel, and Thomas is on to share with us his fourth quarter hot dog token picks for pump season here. So I don't know, Thomas, like, are you a Doge maxi? Are we like moving out the risk curve to Shiba Inu? What do you like here?
Yeah, Doge Maxi. I'm so vanilla in the world of crypto. I mean, I can give my views. Not that they're worth anything, but I was a maxi. I was kind of a Bitcoin maximalist for a really long time, and I don't know, probably like the last crypto winter, I was like, there's real value in DeFi and smart contracts and things like that. And we worked on a few sort of restructurings around tokens and things like that. We helped out the guys. Now the name of the firm's going to escape me, that filed for like a subchapter 5, basically the first ICO bankruptcy. That was kind of fun. And of course, Gox, which I'm sure we'll unpack some. We've been working on that for years. So I was telling you guys this before we started, I'm sort of like two-thirds in TradFi, one-third in crypto, but not in terms of my own assets, just because like crypto's run so hard. And I'm a believer in the space, but I'm like a not trying to overthink it type of investor in the space. Although I do want to get deeper into DeFi, I just haven't had the time to like commit to it. But no, you guys can run crypto circles around me, I'm sure, with all the things going on. And actually, I'm super interested in like Web 3.0 stuff. So like, what is it, like the Rwares and the what's the GitHub one? Like the radicals of the world. Like I'm just very interested in that kind of stuff.
Do you own a Black Lotus?
Do I own a Black Lotus? No, I don't.
Do you? I mean, I think like there's probably people listening to this like Mount Gox. Like we're many years away from that. And my favorite part is that it is like Magic the Gathering online
I know,
exchange,
right?
right?
Well, you know what's really funny? So, I mean, there are a lot of things to talk about here, but one of the ones that came up yesterday is I was talking to somebody that is like a full-time crypto person, and I was like, he didn't really know that much about Mt. Gox. I mean, he actually, I think, had a claim, and I was saying, man, these guys most of these guys should thank their lucky stars because they never would have hodled this long. I mean, give me a break. Like, there's no way that someone that had a $400 Bitcoin cost base would, and yes, of course, there are some people, but a ton of guys would have, and girls or whatever, people would have lightened up, if not sold all 10 times along the way. So most of these cats should be, in a weird way, grateful for having their sort of arms tied to the mast.
I mean, like in some sense, it was like the supply was taken off the market, right? And then all these people were like, "Well, congratulations, the supply is back and it's yours."
The worst is the guys that you meet. They're like, oh, after Mt. Gox, like I totally left crypto, and I'm like, oh man, that hurts, really. Um, but were you guys into crypto in 2014? Were you guys around in the Mt. Gox days?
I was mining Dogecoin and we can't find a laptop.
No. Oh my God, stories like that. How much Doge is on that laptop, you think?
You know what? I don't even. We've talked about it. We can't even remember. Like, yeah, I remember it was the day that Dogecoin launched, and we were like, oh, Bitcoin's old news. I mean, we could go buy some, but yet, like at the time, you had to buy it on
Bitcoin's old news.
eBay or something like that. But it's like, oh, well, we could just like start mining Dogecoin on our CPU. I think at the time it was like, were there even dual cores or something? I don't even remember. Like, but so we ran a Dogecoin miner for like a week or two or something, and then I think we bought $3 of Doge off of someone on eBay.
Oh my God, $3 bought you what? Like I don't even know. Like what do you think you paid per Doge? Like what was the
Many zeros.
Yeah. It's kind of crazy to think about. Like I assume like one of the things I think one of my favorite guys in crypto is the guy at Zappo, Wences Caesar, I think is his last name. I can't remember his last name, but I think he's really cool. Do you guys know this guy?
I don't know who that is.
I've never heard of him.
He's cool. He's a founder of Zappo. But the long story short is he kind of says like, when you're really early in something, it's like, it's kind of easy to think that, oh, this is already over, like this, we've already sort of missed the move. And I've seen it a lot of times with, you meet, we're effectively an investment firm, right? We're managing money. Like I manage money for some large family offices, and sometimes we work with more institutional type investors, like a hedge fund or a large alternative investment firm. And my point is, like, you run across like guys, of course, that have amazing exits. Sometimes it's just in industrial companies, sometimes in tech companies, and for like one time I ran across the Equinix guy who was like super early in data centers and co-location. So like co-location, sort of, I guess, real estate. It's not real estate, but he would think like, oh, we used to make like 100% return. Like we would have like 2-month paybacks on these co-location spaces we set up, and like I thought these guys were nuts when they paid me the number they paid me. And so he basically exited like a few $100 million. Now Equinix is like a, I don't know, $50 billion company. So, I mean, there's been a lot of, they've reinvested a lot of cash flow and raised a lot of money along the way. But my point is like, it's very easy when you're in things really, really early to kind of think that, you sort of missed the move or something. But that's what I've been thinking a lot about recently.
Yeah. I wanted to just like take a step back and do like a proper intro for you. I know I was like messing around at the beginning, but
For
like
sure.
I have a confession. I'm a bit of a Braziel head. So like I learned about you from my
Really?
friend Nate, who wrote a blog called Oddball Stocks.
Oh yeah, Nate. Yeah.
And when we would get together and just like have beers and talk about stocks, he was like, look, Thomas Braziel is like, he finds the most illiquid crazy shit, because like he's into finding crazy shit, and like you were the guy that like found even crazier shit than him. So like I was trying to, like some of your, so I like followed you, like I see some of the stuff you've done, and you find these kind of like illiquid bankruptcy, hidden asset,
Yeah,
lawsuit
totally.
type investments. And this, so like to sum it up in one word, I would say like truffle hound, right? Like you find stuff that's kind of has a lot of hair on it, and then the upside for you is that it's not as risky as it
Right.
appears, right? Like you find this hidden value, and I think,
Well, when you pay a penny, a lot of upside. It's like, no, that's very kind of Nate to say that, and for you to say that. I would just caveat that the reason you can find stuff like that, being a total truffle dog, and I'm sure in crypto, there's tons of stuff where if you're super connected and know about projects that are really starting to take off, there's all kind of truffle hound stuff you can do in crypto, and around protocols, things like that. But in traditional finance, there's stuff too. The thing about it is like the reason it works, and here's the caveat, is it works because really only you or I can do it. Like an institution really can't do it. So some of the stuff I've done over my lifetime, where I put in $100,000 and made 20x or 30x or something like that on it. $100,000 to an investment fund or professional money manager is total chicken shit. Y'all said I could curse. So it's very difficult for them to make, but that's where all the interesting stuff is. I mean, you can go on OTC markets in the States or abroad and fish around, whether they're listed. You can fish around in little bankruptcies. You can fish around. There are guys that do real estate, and they think some of these guys are good and they're humble, and they realize that the reason it works is because it's a small market. But there are guys that do whatever RV park roll ups, and yeah, the returns are 30-40% IRRs, but it's $1 million deal, which for you or I could be awesome, but for a big institution, it's just hard to make that make sense. And so I don't think it's I guess I approach crypto in the same way, which is when I was first doing Mt. Gox, which is the reason I got into crypto, was sort of buying claims on Mt. Gox. No one wanted these claims. Everybody I spoke to said, Tom, that sounds great, but you're stuck in these claims and you're long Bitcoin. And I was like, I've been doing a lot of work on Bitcoin. I actually think it's a pretty cool idea. I'm not saying it's like 100% going to happen, but it's kind of like, taking, you're taking the pill in the Matrix or something. Like once you think about it, you're like, holy shit, if that works, that's going to be worth a lot of money. But I mean, I'm happy to back up and give some background. I mean, that's kind of to say, like my parents, I grew up, in Georgia. My parents were bankruptcy lawyers, or lawyers really. My mom was a bankruptcy lawyer. And I was hanging out around, the bankruptcy court. I literally, I guess, I used to hang out at my mom's office, and my friends were her lawyer friends, and learning about bankruptcy code and seeing opportunities come up through these little cases. Like I remember as a kid, like a card shop going under, and we could buy the entire inventory for $3,000. And this was like, my mom was like, "I'll give you the money. Do you think it's worth like the 3,000?" I'm like, "I have no idea," but it was so much stuff. You think like, maybe this is something worth looking at. So anyway, so that's how it kind of came up, and then time marched on. Went to university, sort of followed a traditional route, I guess, and I don't know, maybe I just don't fit into traditional finance, but I got kind of sucked into looking, and people like Nate Wasabi, that's nice of you to say. They were like inspirations for me. Like I would read people like Oddball and Greenbacked, and can't think of who else was out there. What was the one that Andrew Walker used to run? Maybe he was Oddball. What's Nate's? Is Nate's Oddball?
No, Nate's
Anyway.
Oddball stock, yeah.
Okay, yeah, Nate's Oddball. I can't remember what Andrew Walker's was at the time, but anyway. But these were all guys that, OTC Adventures, which was Dave Waters, and I would read this stuff because I kind of interested in looking at smaller companies, because when you see the valuations, you're like, wow, the valuations are amazing. It'd be like you guys looking at like younger crypto projects. You're like, wow, the valuation compared to like the stalwart project is amazing. So if this works, like this could be huge.
Yeah, I'm really excited that you're on here talking to us. I mean, you probably don't know this because we only have a couple thousand readers or whatever. But on August 20th, there was a project that had gotten hacked, like a week or so before, and everything moves fast in crypto. So like I got to go in and I got to like figure out that what's going to happen, what I think is going to happen, what happened, like was the hack really that bad, blah blah. And I was just like big sparks in my eyes, just like holy shit, this is a big like value opportunity. And the token was trading at $1.20 and it's trading at like 40 right now as we're talking. So yeah, I mean insanity, those moments where you're like, hey, the market has mispriced this, right? Like yeah, something bad has happened, but how bad was it, right?
Well, what I always say is like, I don't mind risk as long as I get compensated for it. So as long as I think the upside compensates me, or the price I'm paying severely limits my downside because it's just like such a egregiously cheap price, and I'm like the scale is sort of tipping in my favor, it's worth taking a look at. Now, catching, there's they're famous, don't catch a falling knife kind of sayings on Wall Street, and but I don't think that's always true. I think it's,
You made a really good point about risk management, right? And I went on Wasabi's podcast like shortly after we had met each other, and he asked me, he was like, "Oh, why didn't you just like go all in on this opportunity?" And like obviously hindsight is 2020. Had I done that, like we would be buying like multiple islands in the Caribbean, right? But I didn't. I put on what at the time I thought was a reasonable amount of risk, and I got a 40x, right? And I was willing to.
Wow.
I was willing to sit through that upside because I didn't put too much on, right? And like I feel like that's that's one of the things the other person we're partnered with, Boomer, talks about, which is like, and I'm curious to hear your thoughts about this. when something's going your way, like he says that you should not sell until you're so like it makes you feel so sick to your stomach that you're holding this thing still.
I like that. I think that I think you should hold like 10 times longer than you feel comfortable holding it. But even then, you're probably better off to sell a little bit. Well, you're probably better off to not try to catch the top. Like, and I guess what I mean is don't expect to hit the top, because that's just kind of
Right.
silly. I mean,
I interpret
to
I interpret his logic as like you should sell the other side of the top, right? Like you should be fine with selling the other side of the top.
Yeah, me too. I feel the same way. I'd rather let it top and then be like, okay, I made my money. I didn't catch the top. That's okay. I still made 20x or 40x or even 5x, whatever you kind of thought was, over what it might be worth. But yeah, it's something to think about. And also taxes matter. Like, if you think about after tax and then opportunity cost of your dollars, if you're paying a high tax rate on a short-term gain versus long-term. I mean, it really does matter depending upon your tax situation. Yeah, I think you're better off selling on the backside. Yeah, I totally agree with that. That's hard. It's hard. Look, if you make 20x, you make 30x, you make 40x. Like, come on, you can't be too upset.
Exactly.
But I would say I agree with you in some sense that if depending upon the setup, if you think you're being wildly compensated for the risk, you should try to put it on bigger than just like an option. But you should be careful not to make it so big that it really will blow you up. I mean, I've seen some very smart people blow up, and I kind of think like, gosh, well, that was kind of silly because you're a smart chap. Like you didn't need to go to zero. Um, you know, but it just depends. If you have an income, how old you are, how young you are, these kind of things. What your cost structure is, if you have a family or whatnot. But that's interesting. No, you got to tell me next time you find a 40x in a broken down crypto name because of a hack. I'm down.
Yeah, well, you got to subscribe to Footguns.
Oh, okay. I'll do it. But
Yeah, I mean that's the thing, right? Is I published I published my investment thesis, right? As soon as I felt comfortable, and I put the risk on. I'm like I put the risk on when I wrote the newsletter, so it's not like I'm sitting in this thing for 3 months and then I'm just like, okay, can I go out and see if I can get some people to bail me out of this trade?
Yeah. But it's true. One of the things I don't understand is like I meet guys in traditional crypto. I mean, in traditional finance, and they don't even they don't even have a discussion around crypto. And then you meet guys. I'm glad you guys are opportunistic, but you meet some guys in crypto well, I don't know, that sort of like really only want to talk about the top tier projects, whatever that means, or I would say like the gold, like the sort of stalwart projects. I don't know. I just think there's opportunity everywhere, and crypto is no different.
Yeah, I mean that's why we have, and I think maybe it'd be great we can get you back on at some point to talk to Boomer because that's like, I mean, that's all he does all day long is sends me charts of like copper and oil and things like that, different commodities that he trades, and he's just like, hey, like, why do you care about crypto so much? Like you could just be doing this exact same thing. I mean, I kind of like partner traded natural gas with him when it was going wild
Cool.
because I was just like, oh shit, that looks like fun. And I mean, he was the one pushing the buy and the sell button. But yeah, I mean, it started. If you go look at a chart of natural gas or lumber futures or whatever, it's like, yeah, that looks like a shit coin.
I mean, look, yeah, I don't think it's any different. I mean, I was talking to someone recently about carbon credits, and when the guy was explaining to me how the carbon credit market works, I was like, oh, this is basically like a crypto project. He was like, what? I was like, well, you have a deflationary schedule, and then you have this like, you basically you're staking so that someone can use your they compensate you to use your certificate every year. He was like, what are you talking about? I was like, never mind, don't worry about it. But it basically looked a lot like any crypto project you would see. So anyway, I mean they're like little economic markets, right? These little
Did they
economies.
partner with Klima DAO to offer 10,000 or 20,000% APY
I don't know.
off locking up
This
their carbon
guy,
credits.
yeah, yeah, that's an interesting thing. Yeah, you got to send me the. I don't know that project.
Yeah, I'm so curious. I put half of an Ethereum into Klima, staking it because it's just like, okay, well, I don't know how they're gonna make this work, but if they make it work, do I need to really invest that much more to get a giant gain off of this?
Yeah, I mean, guys, I'm somewhat I don't want to say old school, but because of the stuff I do all day, I don't always have time. I think once Mt. Gox probably pays out, I'll probably be spending a lot more time on crypto, just because I'm gonna have a bunch of capital.
You're so to be clear, you're just like in this giant Bitcoin position still that you can't really do anything with.
Well, yeah, basically. I mean, we do so let me I'll fast forward. So I used to run I after and I can walk through some like fun war stories. We've had crazy war stories from Distressed, but I came out of come out of undergrad. I had a job for a few years, then I went back to grad school. Didn't really know, it's not that I didn't know what I wanted to do. I knew I wanted to work in principal investing. But I didn't really have anyone that I thought would be a great mentor, like offering me a gig. So I was like, all right, I'm just gonna start my own. So I started my own little hedge fund, trying to basically mimic like a Buffett partnership, and I did that for 6 years. Um, okay, successful. I would say from a business standpoint, not successful. We never really scaled, but my investors didn't do too horribly, which is to me like more important than the business, because I mean you're a fiduciary of other people's money. So did that, and then I really just started doing distress stuff. We actually started doing Mt. Gox in the fund, but yeah. So the first claims we bought were in the fund, and yeah. Then after that, I started doing it for a family office. I started buying Mt. Gox and Bitcoinica, which is like a kind of nested docket. It was the first place you could get like leverage on BTC. So some guys, there's some serious OGs like Roger Vars and people like that who are claimants uh, in in uh, in Bitcoinica, because they were posting to get 8%, 10% interest rates on their Bitcoin, and meanwhile it allowed other people to take the other side of that. They wanted to get leverage, and they would pay 10% for the leverage. Um, but when Mt. Gox went under, like Bitcoinica was just like a matching engine for leverage. All the actual transactions were happening on Mt. Gox. So when Mt. Gox went under, shocker, they went under. So yeah, no, I'm basically long those two dockets pretty aggressively as a percentage of my net worth. But my day job is just doing like kind of normal distress stuff. Like I said, we worked on an ICO bankruptcy. We worked on I think was the first crypto. Um, well, that was an ICO bankruptcy. That was the first ICO bankruptcy ever. The judge was going to call the tokens vouchers, which would have been really a bad result for crypto, I think, in terms of their legal rights. But luckily, that never came to pass. The case kind of fell apart, and it never got discussed as part of a plan. Yeah, sorry, I'm too long-winded here, but
So yeah, I would like to explore more about the Mt. Gox stuff, because I think I've heard you talk about it on other places, but I still had some kind of like questions. I'm just so like, here's what I know. So Mt. Gox was this crypto Bitcoin exchange in Japan, and they blew up, and I guess were they hacked, or like the Bitcoin was gone, and then there are these claims that are left. Was that just like
yeah,
they had some unhacked Bitcoin that was 100% sure was still in there, and that's what the claims that you bought, or like what was the
exactly.
what did you know about where the assets were and stuff at that time?
Yeah, so I mean, I started buying in like late 2015, basically because I read an article in the FT about Mt. Gox going under, and I had read about crypto, I think, like in The Economist, like years earlier, and I thought, oh, that's kind of weird and cool, um, and I didn't think anything of it other than that. I actually was going to go buy some crypto at like, back then you had to like go and meet somebody at Starbucks to buy Bitcoin, which I should have probably done. But I like was a broke student, so I really had no business doing it. Anyway, so Mt. Gox, when I first found it, yes, they had found about 200,000 of the 800,000 Bitcoin. So right now there's about 144,000 Bitcoin, and the reason is because the trustees sold some in the 2008 run up to basically be able to pay all the claimants their what's called their damage claim value, meaning the petition take value of their claim in fiat. So when I was buying claims 2015, 16, originally I was just buying Bitcoin at a third of the market price. So I think Bitcoin when I first bought was at like $300, and I paid a price that was equivalent on a look through basis of about $100 a coin, or maybe a little less, maybe $80 a coin. And then fast forward, so I just bought these, sat on them. Fast forward 2018, the trustees sold some crypto, and then there was fiat in the estate. So then there was a time when, at that time, I want to say Bitcoin was at like $4,000. And no, well, the run up went up to in 2018 up to like 20, but his average price when selling was like 12 to 13,000 USD per BTC, and that allowed us to buy claims below the cash value on all the claim on any given claim we bought. So we got the crypto for free. So that was the best time to put the trade on, and we did that for a family office, and yeah, so that was fantastic time to buy claims. People, and then fast forward, even further, we bought claims all along the way. Now we really buy them for a large crypto hedge fund that really is just paying about 70 cents on the dollar. So it's really not a bad deal for people that want out, given crypto's run a lot. But I always tell people, like, every single seller, like large or small, it's like, hey, if you don't need to sell your claim, like, you should just hold it, because it's not the worst thing in the world. You basically a forced total, and it's likely that you don't pay taxes on the distribution since your original claimant. So it's probably not a taxable event because it's property for property, and so you should try to hold on to it. But some people have life events. They have their wife gets pregnant, they have a kid, they need to buy a house, or they want to start a business. Some guys are working on other crypto projects, and so they want to sell so they can invest in the project that they're working on. And I can't think of anything better than that. You're investing in yourself. But so that's it. And yeah, so when we got involved, Mark Capellas, I mean, I've met him twice in Tokyo. I don't think he's a mastermind. I think he's kind of a village idiot, and it's just like kind of a nerdy idiot. And he, for years, coins had been being sucked off the exchange, and he basically was sort of cooking the books to like keep it alive. And he thought that with the transactions they were making and the Willy bot that he made this bot that was supposed to like trade against customer order flow to like make money, but instead it was actually losing money, which is quite funny. He thought he could make back the losses. And Jeb kind of knew this, the original founder of Mt. Gox, when he sold the exchange. I mean, he openly, like, in his documents where he sells the exchange to what's his name, to Mark, he basically lays out that, like, hey, I have no future liability of this, because, like, that these guys, like, there's missing coins, and there's somebody who's like sucking coins off the exchange somehow. So they knew that was like some problem in their software and their security, but they kind of went about it. And he somehow found 200,000 or 200, I mean, it's either 204 or 205,000 Bitcoin, just like in a cold storage wallet that he didn't even know like existed. He'd like forgotten about. So that shows you how like sloppily the whole thing was run. Yeah, it was the early days in crypto, and
I mean, again, it was called Magic the Gathering
right.
Online Exchange.
Come on, guys. It's called Magic the
It was to trade playing cards, right? Like,
Yeah.
And then all of a sudden, there was a large amount of Bitcoin that showed up on it, and then that Bitcoin started becoming worth something, and then it was like the only place to trade Bitcoin, right, at the time, basically the only place, like, besides going, like you said, to Starbucks and buying it from somebody.
And so what was your view on Bitcoin at that time, and has it changed since then, or was it like pretty? You said you were doing some research at that time. Like, what did you think about Bitcoin? You were just like, hey, if it works out, it's going to be a big win, or did you have any of this like Bitcoin ideology that a lot of people seem to have?
I did put a lot of money into it, so I clearly was like betting harder than my conviction level, or at least open conviction level. I would say now I'm a lot more, open to talking about Bitcoin, but there were years where I didn't really talk much about it because I didn't want anybody to know about it. I mean, in traditional finance, it's I'm sure crypto can be this way too, and all anything that's clubby can be this way. But there's a real group think always going on, and there's always a little like, well, that guy's not wearing the same jersey as me, and people being made fun of for like suggesting buying some dying company or buying getting involved in some crazy industry. And so for me, the first time I pitched buying Mt. Gox claims to a very large hedge fund, well, not very large, but a large hedge fund, about $2 billion hedge fund, the guy fucking laughed me out of his conference room, and I was just like, oh, right, I should probably be careful who I mention this to, because that's the kind of response you might get. And so yeah, when I first was looking at it, I was doing all the typical research people would do, going online, reading the white paper, and I was like, this is some crazy shit. I mean, if this works, this works. I mean, this is like pretty amazing, and who knows where where it leads to. And I would also say that so I was like, I kind of thought like, hey, in an alternative universe, if this becomes like the alternative history of like, instead of traditional finance, this could be pretty huge. That was one thing. And the second thing was I was really impressed just by like brain power of people I would meet in the industry. So you meet very technical like computer scientist types and technology and technologist types, and I was just like, wow, there's so much brain power. I mean, I'm not saying all these people are right or they're wrong, but it's fun, it's interesting, and we could all be wrong, but it definitely, I got sort of sucked into the scene of the brain power as well. So those are the two things that made it interesting for me. But I was sort of a closet sort of buyer of these claims for a few years, and I didn't really talk much about Bitcoin because I didn't want people to think much of it. I always said, oh, it's a free, especially 2018, even then I was like, oh, it's a free option. You get the Bitcoin for free. And people were like, yeah, but it's Bitcoin. It's not worth anything. I was like, I don't know. So you would get pushbacks like that. But yeah, I was kind of convinced. I mean, frankly, just to put all the cards on the table, but not deep numbers, like I basically put all my net worth in these claims, personally. So my investors couldn't be too upset with me. In fact, I mean, of course, my investors pay me a promote on the investment, but I'm still going to make more from my principal, sort of claims that I bought than I will on the promotes. So I did put a lot in and just sort of treated it as a forced total.
That's interesting. Yeah, I think that the thing that kind of made Bitcoin click for me was listening to one of the Horizon Kinetics guys, and he was just putting it as like a
Oh yeah,
kind of a probabilistic thing, whereas like, okay, say Bitcoin is right and it becomes this global reserve currency, then it's going to be worth exponentially more. What are the odds of that? If you think that's even a 1% or 2% chance, then you'd be dumb to not buy any just out of that like expected value of that kind of payoff.
right. It's interesting. Who is it? Because I'm actually quite close. I mean, I wouldn't say I'm super close, but I'm quite close with the Horizon guys. And so, Murray Stahl used to be on the board of this little company, which I know you know about because you were asking me about it, or you put it in the notes that maybe talk about. So he used to be on the board of Winland with us. And I remember having a conversation with him. We were in like the Marriott, in Minnesota, where the company is sort of located in Mankato, Minnesota. So we're in Minneapolis, I think. And he said, oh, just buy like $20,000 worth. Who knows? And I think Bitcoin at the time was like, I can't remember. I want to say like, again, it was like a few $100s per Bitcoin. And I was like, yeah, who knows, right? And I mean, he had a very similar view, which is the payoffs are so big if it works. You should just put 1% of your wealth in it and just forget about it. Just forget you own it. And if it works, great. If not, okay, so what? So yeah, that had some influence on me. But I put 100% instead of 1%.
Yeah. I was gonna say like that doesn't really work for putting 100% in.
I mean, to be fair, I put most of the money in when I was getting the Bitcoin for free, and I was making a legal bet, which is I was making a legal bet that both Japan and New Zealand were going to treat Bitcoin as property, not as a currency for purposes of their insolvencies. So there was a real discussion around Mt. Gox and Bitcoinica, and here was the real risk, guys. So I don't want to act like it was totally riskless, which is normally when you have a bankruptcy, the increase in value from the petition date, meaning the day the company files for insolvency, to the day of distribution, if it's currency, if it's not property, if it's just like currency, the uplift in value shouldn't go to the claimant. It should go back to the company. In the Japanese insolvency law, you get what's called a damage claim. That's why I was saying he sold fiat to be able to have enough to pay everybody their damage claim value, just in case, like, the Supreme Court didn't rule that it was property, and then he could give the uplift, because all the money was actually going to go back to Mark Capellas and Jeb, which is insane. So, and the same thing in New Zealand. But both at the time, there was some case law, both in the States, both in the UK, and a few other jurisdictions that basically said there's no way this is not, intangible property or some sort of property. You can't possibly treat it as a currency where the uplift in value doesn't go to the claimants. So we won in both jurisdictions, both in Japan and New Zealand. That was the bet I got. I paid below cash, so I was going to make like a 6% return just on my cash. Then I got the crypto for free, and I had to win those lawsuits, and I won both those lawsuits. So really the trade was a bit more structured than I probably have put on, as we've discussed, and then in other podcasts where I've talked about it. And that's why people would sell below the trust value, because they were worried, because there was a lot of press, there was a lot of FUD out there that, oh, we're going to lose these lawsuits and the money's going to go to Mark. And I was like, it's never going to happen, because even if you lose on property, you can sue them for unjust enrichment and all kind of manner of, strategies for basically suing the debtor for that uplift in value. So I had like a multi-pronged sort of thought process about how we could get that money. And, I got to basically, make a bet where I was going to make 5 or 10x, and then I got the overlay on Bitcoin, which then of course went up another 10x, or since the 18 time frame, maybe more, right? I guess it's been probably even more. But yeah.
You said at this point I was just saying at this point you were not managing your risk, right? You were just buying like every dollar you could find. You were putting into this bet.
For me, guys, I just saw it as the best bet I'd ever seen. So it was just like, this is the best thing I've ever seen.
Yeah. I mean, I did this with my salary for 4.5 years. By every dollar I made that I wasn't spending on food and pleasure, I was just putting into Bitcoin. And everyone, it was like the most boring trade ever, right? Like it went against me for a while. I basically what they call dollar cost averaged in, right? And then it went, I 10x'd 4 years of my salary. It's like, okay, that's great trade, right? But it's I wasn't managing risk. I was absolutely not managing my risk, right? I wasn't like growing a pool of US dollars. I did, when Bitcoin crashed, that flash crash, basically when the stock market went down in 2020, I did have a little bit of money, to buy it. But yeah, did I wish that I had a little bit more? Yeah.
I mean, I just think in your life, you're only going to have a certain amount of opportunities, and you should probably go in pretty hard when you find ones you really believe in. You just can't go to zero. I mean, when I say put 100% in, I had luckily something else work out quite well. That was a pretty decent. Well, it was for myself. It was a very big payday, and I was like, you know what, I'm gonna have some money because I'm gonna invest in my business and whatnot. But any dollar I've got sitting around, I'm just gonna buy this stuff, because this is like the best trade I've ever seen, especially Bitcoinica. So I should say that like I own some Mt. Gox claims. Like I don't, probably like maybe 20 claims, but a Bitcoinica, I bought just an enormous amount of claims, as a percentage of my, like I'm probably, I don't know, like 1/3 Mt. Gox, like 2/3 Bitcoinica, maybe even more, right? Like 1/4, 3/4 Bitcoinica. And it really was, again, I was getting 10x on Bitcoin, and then Bitcoin went up, from the time I bought them, like, I bought those around like the 17, 18 time frame, gone up, 8 to 10 to 12x, depending upon where it was purchased. So 10 on 10 is nice. And so I really did think that Bitcoin was going to have another run, and not even another run, but I thought that by that time, by 18, I was very interested in Bitcoin as just like a store of value and thought that it was the clear winner. And I was like, I guess my main thesis was like, it hasn't died yet. I like things that don't die. And to me, it made the case more compelling. But that's interesting how that you put that much your dollar cost for 4 years. People don't talk about that in investing. Like some of the best ideas are quite boring. You're sort of like just continuously doing something, and yeah, that's how you make money though.
Especially like everyone around me is like, oh well, you should, why are you doing that? Like you could be buying this, right? Or you could be buying this, or you could be shorting this, or you could, or there's a yield play over here, blah blah blah, right? You could just be buying leveraged oil contracts like every day, or there's a report that comes out once a week about the natural gas reserves in the U.S. You can take that bet every single week, right?
I don't know, man. Yeah. I think if you understand, if you find something and you really think it's good, like you should try to do it in scale. Like you really should try to do it. I mean, have enough to where if it doesn't work, you won't be on food stamps. Like you can still go to McDonald's and you can buy a coffee if you want, and you can pay your rent or whatever you need. But you should try to really go for it. Like I mean, I can't understand people that are young-ish, like anybody like under 30, under 40, under 30, and I'm like, you haven't even looked at crypto? Like, you're just like, just think it's like bullshit. Like, man, I'm just telling you, I'm not telling you it's real, whatever. Just go spend a minute. Like, there's clearly a lot of growth that's going to be here in the next 20 or 30 years. Like, how could you not consider this? Um, and then I see them run their money like they're like they're the Yale endowment. I'm like, I see what they're doing, and I'm like, hey, this is great. Are you rich? They're like, no. I'm like, why do you have like 30 stocks? And it's like, Intel, Microsoft, like whatever. I'm like, what are you doing?
Right. Big, smart, concentrated bets get you rich. Diversification is how you stay rich.
Yeah, I think so. I think some of that's true. And it depends on what you think of rich. Like one of the things that I've gotten a lot of phone calls from people that are very good friends of mine. They're like, "Well, you're already rich, so like why do you continue to hold this? Why don't you just sell it?" And my response is like, "But I'm rich without this. Like I don't need this. Like I already make a good income in my regular job. Um and I have some, built up wealth just through that. So this is just gravy."
Yeah. I mean, I was being a bit hyperbolic when I was saying like you weren't managing risk and I wasn't managing risk because I had a salary, right? Like what happens when that Bitcoin goes against me? Well, I have a salary, right? So like I can start over. I'm not going to go to zero. And then recently for me when we started Footguns about 7 months before Footguns, so I guess it's been over a year now that like I haven't had a real salary. So yeah, I mean, I had to diversify. I had to get back into some dollars because I need to live off of those dollars. And if Bitcoin goes against me now, like I don't have that salary, right? So yeah, it changed my whole risk management outlook. And then full disclosure, I don't know if you know this, but I like recently just got hired by Badger, so again I changed my risk outlook, right? And now I'm like, oh okay, now I can go punt a bunch of shit coins because I'm getting paid again. So if I see something that I'm like, oh actually that's a really really nice opportunity, I'm more willing to take that opportunity now,
Right.
because I have this thing to fall back on.
Yeah, exactly. I think so. I think so. It's like in a way, if you can also design your life to where you can maximize the optionality through like space time, right? Like if you have a little bit of income and you're living sort of like under your means and you have some reserve capital, that can allow you to take a lot more risk than most people. But if you're sort of spending heavily compared to what you earn, and if you're spending every dollar you make and you don't really have any built-up reserve, like of course, like it's very hard to be like punting around on ideas you really think are great. So
Yeah, I think so. I'm I'm a crypto maxi or whatever. Like you were saying, like if you believe in something, go in like 100%, right? So, about a year ago or whatever, I got really bullish on DeFi, and against Boomer's advice, I just moved like nearly 100% of my net worth into DeFi and refused to trade in traditional ways, even though I could probably have made, I mean, whatever, arguably, whatever. I found ICE at $1 and it went to 40, right? And like, could I have beat that trading Bitcoin futures on interactive brokers with like massive leverage? I don't know, maybe, but it would, like, it's a different story, right? So
Mm-hmm.
like that's the story of my life that I want to have, is like I want to be involved in DeFi, and I want to grow with it, and like part of it, like justifying it, is like, can I actually go in here and can I perform like anyone else, right? And I think like I've proven it, that you can. And I mean, it's only been a year, so like, okay, maybe next year I'm just like, hey guys, I got drawn down 95%. Like, I mean, but that's risk, right? That's exactly what we're talking about. It's like, it in my opinion, if you don't see that risk, then like, yeah, like get out, like something's wrong, like
Yeah.
you're getting scammed, right? Like, it's too good to be true.
I think it's like all. I mean, you have to put in the time. Like you put in the time to learn crypto. Like for myself, I put in the time to really learn distress, because even though my parents were lawyers, like they don't really know a lot of the stuff that we do, and that compounds on itself, right? So then if you see another crypto opportunity, um, you're at a much more advantage to look at it. And then if you have that sort of like mindset, and I think for sure other people have said this, but Naval I think says it too, which is like, if you can basically, allow yourself, increase the optionality in your life by like, decreasing your expenses, and like having, the capacity, basically the capacity for pain, right? Because you will get drawdowns along the way. And I'm sure your trade, which that worked out, like I'm sure there were times when I'm sure it didn't go up the moment you bought it, and it's like these are the kind of things that people kind of expect, and it's easy to get shaken out because of them. And that's just not going to happen. You have to have some conviction, but it can't just be blind conviction. I mean, it needs to be somewhat battle tested. But I will say that of all the things that have worked out for me, like there's still an element of risk that you can't get rid of, and it stops people from swinging. So like the family offices and people like that we work for, they're like, okay, yeah, I get it. Like maybe it's a good risk reward, but like there's still risk. I'm like, of course there's still risk. Of course, it's just a good risk reward setup. So you won't be able to eliminate all the risk from it just by like being super knowledgeable on a subject, which I think is a mistake people make. They just think if I just know just more, then yeah, I'll be able to eliminate the risk. And I'm like, no, no, you won't. No.
Yeah. So why
So
don't we get into the DeFi stuff a little bit? Because I know, like, we've talked a lot about Bitcoin, but I haven't really heard you talk in other places about like Ethereum, DeFi, and I happen to know that you own an NFT or two. So like, what I know you've been playing around. You're
I'm
curious.
playing around.
So what's your take? Like, what do you think about ETH generally, and then this whole kind of like universe of projects that are happening in the ecosystem?
I'm so vanilla. I should start spending more time on it. I mean, I think it's super fascinating. I love all the DeFi stuff. I need to do more of it. I own Ethereum. I own Nexus Mutual, which is like, insurance on DeFi. I'd love to think what you guys think of that project. And But I haven't gone super into doing any DeFi myself, largely because I'm usually busy, and I don't have that much capital. And also, like, unfortunately, like Hal, you were saying how like there's all these other things you can do. When the pandemic sort of hit, like I was spending all this time looking at special sits, because there was a lot of cannon fodder out there. There was a lot of shells, a lot of shell shock companies out there to look at, and some of the stuff worked really well. But I probably would have been better off finding something that wasn't so transitory, because a lot of those trades I think are somewhat coming to an end. The special sit out of COVID, so I'm a big fan, but I'm not like involved in that many like I haven't actually done one DeFi sort of like trade of any kind. Um, and I should also, like, I'm kind of a big. I still, I mean, we don't have that much Bitcoin because most of it's in these claims, but But I should probably just pull everything from my traditional broker and just be focused on, crypto. I should just be like total USDC and then like, yield farming. But this is something where, I don't know. I'm like, I just haven't put in the time to learn all the different projects well enough.
It's it's really fun in DeFi. Like okay, so like a trade goes my way, right? And so then instead of like cashing out into USDC, I can cash out into USDT Tether, USDC, right? So 50-50, and then take that and go put it into some protocol and earn 25% interest while I look for a new trade, right? Like it's just like,
Crazy.
and yeah, and that interest is being paid out in a token, and that token, itself like could whatever 10x or something like that. And then if you really have the time, right, then you can take that token, you can go stake it somewhere and start earning yield off of that token. Like, I
Dude,
mean, it's just it's silly, it's crazy, but it's fun, and I think that's like the best part about it.
yeah, I'm a big fan. I mean, I honestly, even talking to you guys makes me think like, God, what am I waiting for to like go deeper into DeFi? Because like all the things I read about and follow, and I'm just like, I should just be like pull the band-aid off and just go like totally, other than like a special sit here and there, just like totally get out of traditional finance. Because the opportunity set in the like, I don't even call them yield farming, but the lending and crypto and all the DeFi stuff is amazing, just amazing.
Yeah, I mean, like for me, so in the last year, it was like, okay, I own some Bitcoin, I own some crypto, that's great. I'm still running my old business, and then when DeFi happened, I turned into like, okay, I'm selling my old business and working for Badger, like going in DeFi. Like it's just for me, it's the difference between just earning, holding this asset that you like versus like participating in this, I don't know, revolution or just helping to build these new
Yep.
building blocks on top of these assets. So like it's the difference between just owning something and like, I don't know, going in this new world.
Yeah. Yeah. I mean, I'm a big fan, but I mean, I think it's you know I don't know, man. Like I don't want to say all the great fortunes, but you always have to be doing something kind of fringy to get to sort of make a lot of money. And I met guys in the like that were wealthy off the dot-com bubble, and the dot-com bubble was a bubble, but all the stuff was real. I mean, you will have you know this is not news to you guys, but you'll have fits and starts where there'll be over investment and over hype, and then like big waves and things. But like some of those guys, like they, no offense, like I think they're brainiacs. No, but they at least like put their time, attention, and money behind like something with a theme they thought had growth. That was like something in telecommunications and online. And I think crypto is very similar. So if you've got the time and you really, also if you enjoy it, it makes it easier. Like it's a hard part for traditional finance guys as well, as they probably work at big firms or decent sized firms, and they're just trying to get their paychecks. And I don't know they have even the time to necessarily get up to speed on some of the things happening in crypto. These things are like,
Well, I mean, we can tell you this because we work for Badger, and all I do every single day, I wake up, I start reading messages. I cannot keep up, and I'm like, I'm one of the best people keeping up, right? Like, but that's where I think like it's obvious, it's an obvious value play,
yeah,
right? Like if the space is the risk, what is the risk, in my opinion, and this is what we said, this was before we made Footguns. Me and Boomer reported this podcast, and I was like, hey, you know what I think is going on right now is I think there's too much money and not enough developers. And then what happened? Bitcoin got cut in half, and then a lot more developers came in, and then now the money's coming back in, right? And so I think that's sort of like the bet that you're making is like, clearly this is attracting the attention of people that would normally be going into things like bio biomedic stuff, physics, traditional finance, basically anything that like would an intelligent person would want to go and spend their time doing. They're now like, oh hey, look, I could go do that, or I could make like 1,000% APY by building a this like interesting crypto project or whatever. And obviously there's going to be winners and losers, but you see the appeal, right?
Yeah, I mean it's I'm not I mean I just think it's like it's easy to. I mean, I got kind of sucked into crypto a bit through Mt. Gox, and I always said like I'm going to go full time crypto when it pays out. Of course, like now it's like gone on way longer than I thought. so 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 I get sort of tethered back, and I assume people, you get sort of put your head down, just working on what your sort of your day job is, or what keeping income coming in. So they don't think to look outside of that. But I think for people that are interested in it, it's a fantastic opportunity, and y'all are making me like really think long and hard about like getting into the space more. I'm like a.
You mentioned Nexus. Hal has some takes on Nexus. I know we were
Oh
discussing
yeah.
it the other day. He's bearish. I mean, I like it, right? Like if you can earn 30% APY and pay 5% or 10% for coverage, like why not do it? But I don't know, Hal, you want to give your take on this?
I mean, I just like my background's in basically like signal analysis, which is like that. It's what you do, right? Like you found all these undervalued things and you bought them, right? You found a signal in the background, and I think the simple bet is like, okay, do they actually have a good understanding of how often a DeFi protocol will get hacked? And if they do, yeah, I mean, I guess like bearish. Like, am I bearish? Am I bearish the token? I don't know. I think that if there's a lot of people that are putting on like these giant positions in DeFi and they don't quite understand the risks that they're taking, then they're really willing to pay someone that will like promise them some insurance on that. But like cover got hacked, what was that, like 8 months or 9 months ago? So like, what happens if the insurance protocol that is insuring the DeFi protocols gets hacked, right? I don't think there's any way that you can prove to me from like a coding standpoint that DeFi insurance protocol doesn't have the exact same risk that every other protocol has, right? So I just don't I don't really see it as being revolutionary. I do think it'll stick around. I mean, obviously insurance like in traditional markets hasn't gone away, right? I just think that if you buy insurance you're getting ripped off.
Yeah,
That's
I mean
just my
that's like the
opinion.
definition of insurance. Yeah, I mean, look, I think it's a cool project. I think the token's very cheap. I think people will use it. Who knows? Maybe over time it's not necessary. But I mean, the token's cheap.
I own $77 of Insure Network. Whenever the insurance protocols came out, what was it, like a year ago or whatever? It was like Cover, Nexus Mutual, and
Mhm.
Insure, and I was just like, oh, whatever. I'm just gonna like throw. I think I put $500 into it. It's now worth 77. It's like Ethereum gas fees are too expensive. It's not worth selling it back into anything else. So, yeah, I picked the wrong one.
Yeah, someone's got to help me explain when are they going to fix Ethereum gas fees? Because I'm not like totally up to speed on this, but they're supposed to be fixing this, right? I mean, for Pete's sake, I mean, this is like insane. Like even for me, I'm like $55. I'm like $75. Like what's going on?
Well, yeah, you asked the question, so I'll represent Boomer's thesis, right? Of Ethereum is the phone that doesn't charge, right? It's all of us in the Footguns Discord, like the most common phrase, shared amongst everyone is like, "Holy shit, these gas fees are so high." So, yeah, Wasabi, maybe you have a take on this.
No, the take is if you're an Ethereum maxi and the gas fees are low, then it's good because the gas fees are low. But if it's high, then it's good because Ethereum block space is valuable and people want to pay a lot for it.
Mm,
So it's good.
okay.
It's good either way. No, I don't know. I mean, like, yeah, like personally, like it sucks to have to like write a list of all your transactions and wait till Sunday morning till when the gas fees are low and then try to do them all real quick before your kids wake up.
Right.
That's what I
That's
do.
funny.
So yeah, I mean, it's not good. I moved some stuff to Arbitrum. I moved some stuff to Phantom. So yeah, I think, it's these other networks that's going to be like for your
Yeah, that's what I
lower dollar
figured.
value transactions.
So like Ethereum, it somewhat like Bitcoin is going to be a little more. I'm going to call them stodgy. They're going to be stalwart projects with a lot of stuff built on them, but they're clearly leaving the door open for other layers and other protocols to take over certain use cases because it's just going to be totally impractical. Like they're never really going to innovate.
Right. Yeah, I was listening to another podcast, and yeah, the guy was like making the point, right? Like that increasing bandwidth of networks is like it's pretty dumb to like bet against that. Like if you come from an area where you like started in dial-up internet and then now we're doing streaming
Right.
videos and 3D experiences, like I'd say it's a pretty safe bet to make that this throughput is gonna go up pretty fast.
So can I ask you guys, what are you guys are like all DeFi all the time, like with most of your capital?
I have well, like I was telling you, like the good trades are boring, right? So I have an account on Robinhood that I only trade options on for funds, and then I have like an FTX account that I have some crypto on that I try and like sort of, I don't know, I would say I make a trade like once or twice a week on there. And then I have a Coinbase account for buying like shit coins. And then I have all the rest of it inside of DeFi.
Mm-hmm.
And I was actually just pulling up. There's this. I discovered this today through Badger. There's this website called dbank.com, and apparently I now have 46% of my portfolio on the Avalanche network, and a lot of that has to do with the fact that I made some one-sided bets on Avalanche that went my way. But I like Avalanche. I'm doing like most of my trading there, and then there's this protocol called Magic Internet Money, and I can basically like sell into Magic Internet Money, and I can like go cross chain within like five. Well, normally, actually nowadays, like it happens basically instantly. So I can take the money to a different network where I see an arbitrage or a value opportunity, and I can within 5 minutes like move the money over, buy it, and I'm paying like $1 or something like that to do all this, and like I could put on really really big positions like for $1, or really really small positions for $1.
Cool. So you basically, because then we could talk about Badger. I have a board call now, but we can go over a little while. I'm actually dialed in the other line, but so you were basically taking your money, going to Ethereum, and then going over. I guess Avalanche is on Ethereum, I assume, and that's like a DeFi protocol. Because I actually don't even know.
Yeah, Avalanche is actually a layer, what they call like a layer one. So it's a direct like Ethereum competitor for block space at least. So it's it has its own way that it deals with security that makes it a cryptocurrency. It's one of the few networks that I use that I haven't done like a deep dive into their what do they call them, like white papers or whatever. But yeah, I mean, just from a user experience, it's nice. It's fast. It's cheap. There's a lot of liquidity on there, which I think that's one of the things in DeFi that people like kind of ignore when they're talking about new chains. It's like, dude, well, if there's nobody that I can trade with, then like I can't trade, right? It doesn't matter what the fees are.
So do you have to hop off now? We can punt the rest of the stuff till a later date if you got to run at this point.
Well, my issue, yeah, I should try to dial into this or have be on this, but I'd love to hear more, frankly, about DeFi than about Badger, because I know you guys are excited about it, and I kind of was reading some yesterday. It was so cool, like which is like that's one of the things I always get annoyed is like I want to own Bitcoin, but then I want to be able to do other things, and if you just lend out your Bitcoin, it's not a fantastic trade. It's fine, but it's not. There's so many bitcoins, sort of like the anyway, you know what I mean. Like the rates you can make are not very high. And so I don't know. Very interested to hear about. Yeah, let's do that. Do y'all want to try to chat on either Monday or honestly, I'm around tomorrow as well.
Yeah, let's do that. I think Badger has a lot of moving parts, so it's kind of hard to cram that in. So yeah, why don't we punt till another time? But Thomas, this has been awesome. Thanks so much for your time.
Dude, yeah, send me Hal if you have my information or Wasabi. Like if y'all send me the stuff, like and y'all's. I'm trying to find it online. I want to make sure I was on the right website. but am I on it right? Foot.substack, is that y'all? Footguns?
Yeah, we got Foot.
You got Foot.
We are, yeah, we're
That's
still
awesome.
we're still not certain if people are listening to us because they like crypto, guns, or feet. Yeah.
You never know. You never know. I'll definitely subscribe. It's cool, man. I need to get deeper into DeFi for sure. I have to admit that like I only know like the very basics, you know. I don't like I've never had like, and I should spend more time on it as opposed to looking at TradFi stuff. I'm just so used to it. But, normally in TradFi I'm looking at like the most obscure stuff.
Yeah, well, let's definitely chat. I'll send you an email, and let's keep in touch. This was great. Yeah, we'll let you get to your call, and we'll get back to DeFiing.
Get your DeFi on. All right, bye guys.